Welcome to Lunch with Lake Ridge, where we serve bite-sized pieces of community information that you can digest at your convenience. I'm Bernie Guthrie, the COO General Manager for Lake Ridge Parks and Recreation Association, located in eastern Prince William County, Virginia, and I'll be the host for this segment. Today we have with us Bennet Whitlock of Whitlock Wealth Management Team. He's here to share valuable information with the residents of Lake Ridge. Mr. Whitlock, thank you so much for joining us on this wonderful Friday afternoon. Can you tell me a little bit about your 29 years of experience as a financial advisor? And I know that you're also a chartered retirement planning counselor. Can you expand a little bit about what it is that you do?
Yeah, so Whitlock Wealth Management did just enter our 30th year, which will be celebrating that anniversary coming up September 2024, which we were very excited about.
My calendar.
Huh?
I will mark my calendar.
But yeah, being a chartered retirement planning counselor is really the direction that our firm has gone into, which is really taking a look at the pieces to the retirement puzzle that everybody basically faces as they begin to transition out of the workforce, and helping them put those puzzle pieces together. One, so it makes sense, but also to make sure that somebody is basically on track to basically have the type of income that they would like to have throughout their retirement.
Oh, so how did you end up in this field of all of the things in the world that you can do in the finance arena? This is where you ended up.
Yeah, it's, I feel very fortunate. It's one of those things where I was actually able to combine a passion for investing and turn it into a career. So I have always been interested in the stock market, going back to the 70s and the 80s. And one of my grandparents at one time gave me a stock certificate with 5 or 10 shares of stock because they knew that I enjoyed watching the market and keeping up with all the economic information, which we now have much more access to, which makes it much more confusing for everyone. But it was really a passion for the industry, and boy, has it changed over the last 30 years.
It really has. I noticed that in a recent webinar, you mentioned that there's some data points to indicate the Federal Reserve will lower basis points. For the layman like me, I'm hoping that, can you explain a little bit about what that is and what that would mean to, just a regular resident of our community?
Yeah, I mean, these are kind of the data points that we keep up with, that we monitor, that we track. And then we basically bring that information back to our clients in a digestible way so they can kind of understand it. I can throw out a bunch of initials for you, like CPI and PPI and the JOLTS report. That may not mean anything to you, but these are numbers that we continually monitor and watch. They come out on a monthly basis, and they can basically tell you whether your cost of living is going to be increasing, which of course, about a year ago, the cost of living was increasing at a little bit over 9%. And the Fed has done a lot of things to bring that annual costs down. And so what we have been seeing with things like the CPI, which is a consumer price index, is we have seen it come down fairly dramatically over the last 6 months, and the trend is still continuing down. The other report that actually came out this week was the PPI, which is the producer price index. And so there's usually a lagging time frame between when you see producer prices move in either direction and then how they affect us as a consumer. And so that is even trending down at a little bit of a greater pace. So we expect that to continue to put downward pressure on inflation. And hopefully we'll continue to see inflation go down going into 2024.
Well, I think most of us felt it significantly in our grocery bills, and it absolutely is it's not only a trickle down effect, but it's almost just pervasive. it doesn't, it's not a linear pattern. It just sort of balloons out and starts to encompass everything, whether that be the gas that you're putting in your tank, your car insurance, feeding your family, the cost of college, textbooks, everything.
Yep, yep.
And it's not something I feel that we're able to adequately anticipate or plan for.
When you have inflation of 9%, yeah, that's a little out of the what we would call the normal range. It's the last time we had inflation like this was really 40 or 50 years ago. So it doesn't happen all that often.
Mm.
But what's really interesting, and we've had a lot of conversations with clients recently, and I keep getting the same type of feedback, because what you're hearing if you're watching Fox Business or CNBC, or listening to any of the market news or information coming off of the TV, is that everything is great. Everything is really super right now. The cost of inflation is 3%. Everybody ought to be happy as a clam. And there's just a huge disconnect between inflation coming down and the cumulative effect that you and I and all the consumers feel, because not only are we dealing with the 9% inflation a year ago, we're dealing with the 3-4% inflation this year. And so that has a cumulative effect on our pocketbook. So the consumer right now isn't buying that everything is great, right?
Right.
And so there is a bit of a disconnect between the messaging that you see about how everybody should be feeling versus how everybody is actually feeling.
Especially, during the holiday season, everybody feels the pinch. Here at Lake Ridge, we spent just about 60 days going over every single expenditure that we had, where we could keep a lid on the cost, where we could make concessions. We really felt that it was our obligation as a team to do everything that we could to keep Lake Ridge LRPRA stabilized. That's like the one thing we can provide to the homeowners. We can't help you with the groceries, we can't help you with gas, we can't help you with mortgage interest rates, but we can work on our little corner of the world and try to do as much as we can to do some little help with, like, stabilizing our assessments. There are some things we can't control, but there's some things that we can. So what advice would you give to our younger residents who are just starting out on their financial journey? They are, I think, the ones that are hurting the most right now.
Yeah, I mean, this is certainly a much different environment for the upcoming generations that really haven't been in a what I would kind of refer to as a normal market, which actually includes interest rates in the 4 to 5% range and mortgages in the 5 to 6% range. Some of us have the benefit of experience of time. And we have seen what normal markets look like, really for the past 10 or 12 years, with 0% interest rates, keep them artificially low. I don't think really has done anyone any favors. But now that we have had the rates come back and people are looking to purchase homes, I mean, even autos, the interest on purchasing autos has increased as well. It is a bit more of a challenge, and home ownership always was a bit of a goal. And I would just say that for those that are looking to make a purchase, hopefully rates are going to be a little bit lower for you here going into 2024. But housing prices in this area, in the metro area, we rarely ever see them pull back. So, take a look at your budget, take a look at your cash flow, take a look if you're out renting, how much you're spending in rent. You can go online, you can go to different websites, you can calculate out mortgages and how much you can afford based on what you might be paying right now. And then put a game plan in place. Maybe it's 12 months from now you want to purchase. Maybe it's a little bit longer. Maybe it's a little bit shorter. and then begin putting some discipline in place to be able to set aside some money to be able to use towards a down payment on the property. Um, but yeah, this is an expensive area to be in, and so down payments and making that first purchase are quite challenging.
I've, I have two 20-something-year-old sons, and it hasn't worked yet, but I'm actively coaching them. I said, you have to get in the game somewhere.
Yes.
That's, back in, 30, 40 years ago, we started with a condo, and then you sold and you moved up to a townhouse, and you sold. And if your family grew out of the townhouse, then you sold that, used the equity, and you moved into a single family, and you had a growth pattern. And somewhere along the way, society reached the point where they just wanted to kind of go right in its top. And that growth isn't happening. So that 20% down payment or so that you would put in to your home purchase has become almost unattainable. Whereas if you were doing a lower purchase, like 130 or 140 or $1,000, and maybe you renovate your condo, then you start to build that equity up. But
And
they're
there are some programs out there for new buyers as well that do help a little bit in getting into your very first home.
Oh, any recommendations on where we can point people?
Um,
Any good sources?
yeah, I don't have any particular. I mean, there's a good old Google, right? So all of the information is online as far as the benefits that are available to new home buyers.
Take time and do your research first, right? Don't just
So
jump into it willy-nilly.
Well, it can be an existing property where you can get the benefits, or if you're actually looking at new construction and you're dealing with a builder who's, putting in the second section of a development or something like that, you can actually work with the builders
Oh,
and may be able to get some additional incentives or first-time home purchase discounts from the builder as what is normally available to you as well. So yeah, it's really just a lot of it is just starting to do some of the research and figuring out what you don't know and really what the right questions are to be asking to be able to find the opportunities to be able to make the home purchases.
wonderful. So on the other side of the spectrum, there's the young and the upwardly mobile and just starting out in life. And then we have in Lake Ridge, the other side of the balance is going to be those who have retired and are retiring in place and are lucky enough to own their home or own very little on their home. But there is a fixed income that they're trying to work with in these troubling times. So what would you recommend for those either, in retirement or facing retirement?
My my first recommendation would be to make sure you have a good handle on all of your financial information as far as expenses, as far as assets. Where is your income coming from? Is it coming from guaranteed sources? Is it coming from pensions? Is it primarily coming from Social Security, which is a big question that we help people work through. When should I take my Social Security? Because there are some claiming strategies available to couples. And then, if you're concerned about your retirement income, I would say reach out to somebody that can help you put the pieces to the puzzle together. Speaking about real estate, we do have clients that have actually oh gosh, I'm going to draw a blank on the term. They've done the reverse mortgages.
Oh, I've heard that.
Yeah, they've actually because they're over a certain age, I believe it's 65, and they only owed or their home was paid off. They've worked with a reverse mortgage specialist to basically actually derive additional income off of the real estate property. So there's a lot of different ideas. There's a lot of different strategies out there that are available to people. And that's what we try to bring to the table. Because there are a lot of opportunities that people are just unaware of that exist, as far as from investments or generating income or making money. And that's where having somebody that is actually tapped into those opportunities is good to have on your side.
Yeah, so again, it's another, gather your armor up. Make sure you do your investigation and take time to make the appropriate decision for yourself. So given that home ownership is typically the biggest investment that people make in their life, what advice do you give to homeowners regarding the transferring the ownership of their property in the event that they want to leave it to their successors or to their family members?
Most people probably won't like my initial statement, but that's okay. Most of the times, the next generation really doesn't want the property.
Huh.
Um, I,
Dagger in the heart.
I mean, you can transfer it to them, but more than likely, they're going to just turn around and sell it.
Ah,
I mean, that is part of the planning. That is part of the putting your retirement and estate plan in place is figuring out what the best method is as far as transferring property to the next generation. Um, so depending upon, if you're looking at you just have a single home, and you're looking to basically pass that on to the next generation. We actually recommend that clients look at setting up revocable living trusts. Now, we don't get into the weeds of the estate plan. We will provide opportunities and strategies around ways to do the estate planning.
mm,
But a lot of time with revocable living trusts, the property will pass without having to go through probate, which can be expensive. With a non-revocable or with a revocable living trust, you're essentially settling your estate while you're still alive.
ah,
So you've basically put all the pieces in place. It doesn't have to go to the court. It
mm,
doesn't necessarily have to go through the entire probate process. And typically, estates will settle a lot more quickly by having a trust in place than having to go through the probate process. But if you put a trust in place or you put an estate plan in place and you put beneficiaries in place, and you have 3 or 4 children that you would like to leave, a third or 25% of the home to each of them,
mhm.
you can do that.
Wow. So you really can't take it with you, huh?
No.
Afraid you would tell me something different. So do you have any tips or advice? You had talked about knowing where your money is coming from and where your money is going. Do you have any tracking tips or software tips, or what have you found to be the best method for people to really come to terms with exactly what they have and what they need as they move forward?
Yeah, so I mean, kind of depending where somebody is in their journey. I mean, if you're, in your 40s or 50s and you're looking out towards retirement and trying to figure out what that looks like, then really kind of starting with what type of lifestyle you would like to have in retirement, right? So if you're making 100,000 a day, you're making 150,000 a day, and you're thinking, okay, this is not a bad income right now. This is something that I believe, going into retirement, I'd be comfortable living on. Then you need to begin planning to make sure that with the resources and those retirement puzzle pieces that I mentioned, that they're going to mesh up, that they're going to add up, and that they're going to be able to generate that income for you for the next 30 years throughout retirement. For our folks that are actually, just in retirement, couple years out, retired 4 or 5 years, um, one of the best things you can do is make sure that you kind of track your expenses, right? If you don't really know how much you're spending, for certain items, put together a budget. And you don't have to make this very tedious. You don't have to go back and track everything, every month and every penny that's coming in and going out. Some people do that, and that's awesome. But you needed to have a general idea on how much you were spending across the board for food, utilities, travel, eating out, um, and be able to kind of document that, because a lot of times when we do this and we work with our clients in retirement, um, the expenses vary, right? There may be a lot of travel one year, there may not be a lot of travel the next year. And you need to be able to plan for these things. And so knowing what your cash flow is, knowing if you have any disposable income, or maybe you don't have any disposable income because you really haven't put a budget together and you're just kind of spending the money as it comes in. And, the bank account gets refilled the next month and you just kind of live on the money that's coming in. So either putting together the budget and tracking it for yourself, and making sure that you're spending less than what is coming in, is just a great way to be able to have comfort, that you're going to be able to keep up with any future increases in cost of living, right? That's one of the things that we help our clients plan for. So if you want to retire with, $100,000 in income in 2024, that's not going to buy you the same amount of goods in 2034.
Right.
So you got to be able to plan for at least a 3.5% rise in the cost of goods and services over retirement. They typically say that when you retire, whatever income you retire on, if you don't factor in any cost of living increases over the next 20 or 30 years, that $100,000 20 years from now will only be buying you $50,000 worth of goods and services.
Wow, that's amazing. So let's change the topic a little bit over to financial crimes. I think everybody has seen an increase of the scams and everything else. We recently changed our insurance broker, and as part of the review of our policies, we talked a lot about, how we handle the homeowner accounts in-house. And we've recently had to make a few changes that are sometimes, I think, a struggle for the residents. The biggest was last year we stopped accepting credit card payments in the office and over the phone. And then this year we're no longer accepting checks at the front counter. Everything goes into the secured drop box. And then it's collected by, two people who are identified as such on the team, who obtain the checks, post the checks, and then scan the checks directly to the bank. A lot of homeowners have expressed a little bit of frustration that they can't come in and just toss a check across the counter. And we're trying to explain to them, and if you have any words or advice, we would love to hear it, that the world isn't what it used to be. And, check washing is back. And somebody looking over your shoulder can take a snapshot of your bank account and your routing number and take your money before you've even left the parking lot. So if you have any advice for them and for me in helping explain to them that we're trying to help keep their information secure, I would really appreciate it.
Yeah, this is a great topic, because the schemes and everything as far as financial fraud and keeping finances, everything safe and secure, it's an ongoing battle, and it certainly has changed over the last, especially 10 years with technology. And we faced a little bit of this challenge as well. So we actually made the transition really fairly quickly. We had the tools at our disposal, which was kind of nice. But we have gone primarily to either doing electronic drafts directly from bank accounts for people, doing a one-time pull with their authorization and permission. We actually have a app that our clients can use that is tied to an encrypted virtual private network, so they can deposit checks right from their phone. And it has been a challenge. We have a fair amount of people that would rather just write us a check and mail it to us, versus going through any of the electronic changes. Electronic is much more secure and much more safe than writing checks or mailing checks. Anybody can walk by, open the mailbox, pull out a written check, and before you know it, that money is going into their bank account and not really where it should. So one of the things I would say is that everything is always changing and everything is always evolving. LRPRA is making the changes. They're making the adjustments necessary to keep financial security safe. And unfortunately, we sometimes just have to make those changes. And it can be a bit of a challenge. It can be a bit of a transition in making those. But we certainly see with a lot of our clients that we got a lot of initial pushback on some of the changes that we were making. And eventually, I can probably say, dealing with other institutions, or get an email, or you get a text message, and somebody's asking you for information. Just take a deep breath, step back, talk to someone talk to a friend, get a second opinion, because the financial scams are getting more and more sophisticated. So, you can get emails from Bank of America or from, a lot of different companies that look exactly like they came from where you basically deposit your money. And it could be coming from a totally different location. So if it doesn't look right, if it's an electronic communication and someone saying, thank you for your purchase, please go in and verify your information. If you don't recall making the purchase, just delete the email. If somebody really needs your information,
You're right. You're right. I think that it's important, the tip that you gave about knowing where your income and expenses are going. I think that intimate daily familiarity with the status of your finances will also help protect you against the crime, because you'll know that you didn't make that. But if you're just spending constantly, and I always call it zip zip with the check card, you do tend to lose track of the details of the transactions. But if you take a moment and every morning you spend 15 or 20 minutes really dialing into your status of your finances, it'll help prevent the crime from happening. You'll know immediately if there's a breach in your account or something like that. So I know that we plan on continuing our journey towards making sure that the homeowners are safe as much as we possibly can. And you're right to explaining a lot.
well, and this is where, we have the conversations with, with people and clients, as far as working with your financial advisor, your financial institution. It makes a lot of sense basically to work mostly with one provider, because I can tell you from our standpoint, one of the things that's extremely important from a security standpoint is we are your first gatekeeper. And so one of the things that's important to us is we know our clients. We know our clients not only from a personal standpoint, but we have a centralized supervision unit that knows how you transact business, if you do it electronically or not. And if 2 years go by and all of a sudden you're adding a bank account online, we're not going to actually let you add that bank account until we have actually reached out to you and verified that it is you putting that bank account online, because you haven't done anything online in the past 2 years.
Right.
So this is where, getting to know your clients and basically how they transact business with you is extremely important.
It is. Wow. You certainly gave us a lot to think about today. I appreciate you taking the time to share all of these nuggets with us. And we look forward to having you dish up some more information soon.
Absolutely. Be
Thank you
glad
so
to.
much. Thank you so much for spending some time with us today. We really appreciate it. And as Helen Keller once said, alone we can do so little, and together we can do so much. So thank you, Mr.
Absolutely.
Whitlock. I hope to hear from you soon.
You're welcome. Happy holidays.